What is if somebody wanted to Google it, what is the tax code 43C?
IRC 453.
IRC 453. So I'm trying to piece it together as you're going through it. I think I'm starting to get it. So essentially, I want to sell an asset that I own. I'm going to sell it on an installment sale. The transaction goes through, the proceeds, whatever you want to call it, goes to this deferred sales trust. It is this entity. It then has essentially out of that, I structure payments or proceeds or whatever you want to call them. Thus, I'm not paid on the lump sum. I'm paid on only the stream of income I get from that. It sounds like what's happening. And then if I want to use it, i.e. buy 60 cents on the dollar, I go back to this entity, I restructure it. It then becomes assets I could use going forward. It sounds like what you're describing.
Yeah, you nailed it. Just like if you're doing an installment sale.
I've
just
done
like
this.
if you're doing an
Accounting
installment
is
sale,
wonderful.
Michael, with a buyer. Like Joe
Yeah.
down the street wants to buy your $10 million
Yeah, I get it.
of an apartment complex. You could do 100% financing for Joe.
Absolutely.
Now, you
all the time.
wouldn't do that in a real world. Why? Because all of your future's tied to Joe. Second,
Right.
your funds are illiquid. They're
Correct.
tied to Joe. Third, he's probably paying you 5%. Fourth, he's probably going to refinance and pay you off anyways in the next 2 to 3 years when he adds the value.
That's the big risk. Yes.
Yeah, that's why you're like, most people are like, it's worse than Blockbuster 1031. And then
I can't predict it. It's not predictable. Yeah.
Yeah, and then traditional installment sales like Hollywood Video.
Yeah.
Right.
Yeah.
It's just you're like, I'd rather do a 1031, right? Like, because also you forfeit the 1031 once you go in and once you go 453, right?
Of course, yeah. So it's
we're taking all of the best of the installment sale, but we're getting rid of like basically all of the worst, right? And so what we say about Netflix is we add this trust and we say, hey Joe, tell you what, go get a loan for $10 million. Like, we don't care how you get the money, all cash, doesn't matter. But Michael's not going to finance you. However, we're going to ask you to cooperate with this trust, kind of like cooperating with the 1031, right?
Mm-hmm. Oh, yeah.
And we're going to ask you, it's going to be 3 parties, and basically the trust is going to jump in right in before close of escrow. And Michael, you are going to finance 100% the trust.
Yes.
But here's the cool thing. The collateral can be secured against the biggest companies in the world. Google, Netflix, Home Depot, your own hard money lending, your own real estate purchases, right?
Mm-hmm.
All dollar cost averaging.
Mm-hmm.
And then and the buyer, he actually buys the asset from the trust. The trust establishes a new basis, Michael, right? It bought it for $10 million from you, and it sold for $10 million, so it has no gain. Mm-hmm. The buyer takes title. He's gone. He's happy. Nothing changes for him, and your funds are sitting in a state of deferral, kind of like an IRA, kind of like a 401k, kind of like a 1031. It's kind of like a lot of those things, but it's only going to do business with you, and you have become the lender.
Right.
And it's owed to you slowly. You'll pay tax.